Welcome back. It is Friday, April 10th, 2026, and Wall Street just wrapped up its best weekly performance in months. Let's break down the key drivers behind this rally and the risks still looming on the horizon. By the close today, the major indices showed a mixed performance. The S&P 500 finished slightly lower, down 0.11%, while the Dow dropped 0.56%. However, the Nasdaq managed to hold on to gains, closing up 0.35%, led by continued strength in the semiconductor sector. Despite today's quiet movement, the bigger picture is impressive. For the full week, the S&P 500 surged more than 3%, the Dow gained over 3%, and the Nasdaq climbed more than 4%. This marks the S&P's best weekly stretch since last November. So, why did markets rally so hard this week? The answer lies in the Middle East. Earlier this week, news of a fragile ceasefire between the United States and Iran triggered a massive relief rally. Oil prices, which had been trading well above $100 a barrel since the conflict began in February, finally began to pull back. This took the immediate pressure off energy costs and gave investors a green light to buy. The Dow alone jumped 1,300 points in a single session, its best day since April 2025. However, the mood turned cautious today. The ceasefire remains thin, and Vice President JD Vance has arrived in Islamabad for high-stakes talks with Iranian officials scheduled for Saturday. Markets are watching these negotiations closely. If they break down, we could see another spike in oil prices. On the inflation front, March CPI rose 0.9% month-over-month, matching estimates. While that headline number looks high, nearly three-quarters of that increase was driven by a 21.2% jump in gasoline prices. If you strip out food and energy, core CPI came in at a modest 0.2%, which was actually slightly better than expected. One major red flag, however, is consumer confidence. The University of Michigan's Consumer Sentiment Index plunged to 47.6 in April, the lowest reading ever recorded. Consumers across all demographics are feeling the weight of high prices and weakening asset values. In corporate news, TSMC delivered a massive beat, reporting a 35% surge in first quarter revenue. AI demand continues to be the primary engine of growth there. On the flip side, Tesla continues to struggle, marking its 8th consecutive weekly loss, a 23% slide since January. Looking ahead, next week officially kicks off earnings season with a flood of reports from major banks like JP Morgan, Goldman Sachs, and Bank of America. Stay disciplined, keep a close eye on those ceasefire headlines, and we will see you next week. Thanks for watching. If you enjoyed the video, please give it a thumbs up and subscribe to join our investing community. Also, hit that bell icon to stay updated on the latest market trends. See you in the next one. Disclaimer: this video is for educational and informational purposes only and does not constitute financial advice.